Hey, good morning. This is Greg Josephchuk, your premier Century 21 Lori Lawrence out of Mooresville, North Carolina, Lake Norman real estate agent. And today I'm excited to be here at the Mortgage Planner office of Element Mortgage in Davidson, North Carolina with Jacob Roche.
Thank you. Thanks for having me.
Yeah, thank you. I'm excited to be here. Thank you for allowing us to shoot this segment today in your backyard. So Jacob, I thought today what we would talk about is what is going on in the market, the mortgage rates. We've seen them. Obviously, there was a Fed meeting last week. I think good news came out of that, the beginning of good news, right?
Exactly.
And that had some effect, I think, on mortgage rates.
Yeah.
But maybe you can, let's start with where we are today. Where have we been over the last 30, 60 days?
Yeah.
Okay. And, you know, and I know no one has a crystal ball, but kind of where do you think the Fed is heading in the next 3, 4, 5 months? And where do you think mortgage rates are heading as a result of that?
So, yes, great news last week. Fed came out, 25 bip rate cut, perfect. So what I always say is that they typically price it in. So my clients, when that day happens, they think that rates are coming down that day. What they typically do is price it in. So what I always tell clients and what I see, I mean, every time they've made either a rate hike or a rate cut, they price it in. So the market 2 weeks prior to that rate cut, there was a 30 bip drop. Well, then they said the rate cut, nothing really moved too much. So over the past 60 days, currently, we're right around 6.3 roughly, depending on, a lot of variables to it, down payment and credit and whatnot. But FHA is right at 6 or just above. We actually saw it go below. I actually locked in a client at 5.75. So we are getting to the high fives in some products. Jumbo has come down to about 6.25, where that's been higher than every other product. VA right around FHA, same government program. But recently, I would say past 60 days, give or take, we're still hovering right around 6.75 to about 7, and then we've really seen it taper down the past few months, which is great. A lot goes into these rates. At kind of uncertain times, like you said, no crystal ball, right? So I would say there's inflation data. The tariffs shook it up the market a little bit when that first was coming out. Employment data. There's a lot of factors that go into all what rates are doing right now. So while exactly right, there's no crystal ball, there's some projections. Some people are projecting maybe 1 rate cut. And then I saw one projection that said 8 throughout 2026. So again, I think my personal opinion, let's see how it plays out. Need data to support anything that they're doing. However, the one thing that I saw was next May, Jerome Powell might be moving out of office. Well, now if he has the same, it will be Trump who is electing, who he has said rates need to be lowered, which the whole Trump administration has said that. So I anticipate Trump putting in somebody with the same mindset of let's get rates lower, let's get the market back moving, because when we get below 6, my phone gets ringing a little bit more, I'm sure, same as yours. So I guess more to come, and we'll see, kind of. Hopefully that's an okay answer there.
Yeah, no, absolutely. And I think we've already seen, the president appointed a new governor on the board.
Yeah.
And I believe, if I looked at the meeting notes correctly, he was the only one that actually voted for a greater cut in the rate than 25 basis points. I think he was advocating a 50 basis point rate cut. So to your point, and I also happen to know that is also a candidate for potentially replacing Jerome Powell. So it'll be interesting. But so I think you and I would agree that as we look out, there's probably a fairly good chance that rates are going to continue to come down, but not drop off a cliff overnight, correct?
Yes.
They're going to start coming down. And to your point, we know that Wall Street, right, predicts kind of where these rates might be heading.
Yeah.
To your point, they usually predict it 2 weeks prior, 3 weeks prior to a Fed meeting. Exactly. And there are continuing Fed meetings coming up in the upcoming months, so we'll have to wait and see. You know, in real estate, we have this old saying I'm sure you've heard where we say, date the rate, but marry the house, right? And for those of you who don't know what that means, date the rate means exactly what it implies, all right? If you find the right home that checks all the boxes off, right? Especially as more buyers come into the market, right? As rates come down, more people that have been sitting on the sidelines jump into the market, right? All of a sudden, prices tend to go up. It's just simple supply and demand. We know that right now it's kind of a buyer's market, but it could very easily switch to a seller's market, right? Where you might have multiple bids on a home. And so I'm telling my clients, buyers, we have a lot of people that relocate down here, as you probably know, that, hey, don't be so focused on the rates, because even if the rates come down, you can always refinance. Now, I know that you offer a certain guarantee, essentially, that if they go through you and the rates come down, they can refi and not pay a fee for doing that. Can you explain that a little bit?
Yeah, we actually still have it going. I mean, as rates still come down, I'm anticipating my company's probably going to end that pretty soon, but it's a 5-year rate drop pledge. So over the next 5 years, if rates come down, right? No lender fees, appraisals reimbursed to you. It's about $2,400 in savings.
Wow.
So it's pretty good security and protection as you purchase. But like you were saying, like there's a lot coming into the market, and it is still. I mean, if it's priced right, it's typically going pretty quick. What I say to clients is that, let's say the payment difference is $100 per month from 6 to 6.5. You can call it $200 a month, or whatever the difference is from where rates were to now versus where they are in 60, 30 days. $100 a month or $1,200 a year. Is that going to $1,200 per year? Will that cause you to not purchase a home now? Will your appreciation be greater when rates do hit that 5% and everybody floods the market, and everybody's in this COVID time, right? Where everybody's putting multiple offers in on the same property as soon as it hits the market. So for me, it's like you'll probably get the appreciation opposed to being too sensitive towards rate, in my opinion. Don't let $2,400 hold you back. In other words, you can still negotiate and get a good deal in today's market. I mean, there's seller credits. There's a lot that you can do with seller credits. People don't know you can outright pay off private mortgage insurance. There's a single time premium. If you negotiate that, you can go 3% down, negotiate with the seller, and they will, if they have enough seller credits into the deal, you can pay off your mortgage insurance with going 3% down.
Wow.
Not something that you were getting during COVID. So now is the time to jump in the market if you haven't already, in my opinion.
Absolutely, absolutely. Well, Jacob, I appreciate the insight, and that I think will do for this session of my podcast and of my YouTube channel. But thank you very much. I appreciate it.
My pleasure.
Thank you.